Want to know a secret? Every single move in the market, no matter how confusing or complicated it looks, boils down to only two things. Price will either snap back to the level it came from, or break out to a new level. That's it. Everything you see in the market is just the price trying to decide which level to move to next. The rest is noise that's meant to throw you off. So if you're able to spot one of these plays and trade them properly, you don't need anything else. Every single trade fits into one of those two boxes. And when I started trading that way, with structure and simplicity, my P&L flipped almost instantly. And I'm going to walk you through exactly how it works in this video, so that you can apply it immediately and copy it trade for trade. Let's break it down. So, take a look at this blank chart, and tell me where you think the price will go next, as well as how you would trade it. Now, in most cases, you might put a stop above a local high or low and target the same. So you might enter here, put a stop above this high, and target somewhere around this low. But something like this could happen. You were right, but took a loss on this trade. So now you're thinking, well, what should I have done on this trade? Should I have put my stop above this high instead? I mean, that's definitely not the best risk-reward ratio. Maybe I should have targeted lower? Well, that doesn't really work either. So the reason trading has an extremely high failure rate is because it's not supposed to make sense. It's not something predictable. It's just a visualization of the money flowing in and out, and how it's constantly shifting based on supply and demand. And that's something that can change at any time. I mean, you can try to predict where the market will move next if you want, and you might get it right sometimes. But is that really something you can sustain? How long can you last by consistently beating the odds in this random and unpredictable market? Because remember, it only takes one string of losses or one slight emotional slip to reverse everything you've gained. It's really like walking on a tightrope with no end in sight. I'm sure we've all heard the stories of traders who strike it big and then lose it all. But unfortunately, trying to predict the market and basically brute force your way through it is how most traders approach it. And most traders fail. Because like we said before, the market is nearly impossible to predict consistently. If you want to avoid getting stopped out and increase your win rate, then you need to make your stops wider and your targets smaller. But that lowers your risk reward, so you'll make less profit per trade. And if you want to increase your risk reward, that means you'll need wider targets and tighter stops, which will inevitably lower your win rate. Eventually, it comes down to the same problem, which is that you're not building a consistent and sustainable edge. That's what takes almost everyone out in the long run. And the problem is, even if you only trade at a certain time or a certain setup, it might help that you're getting more specific, but you're still subject to the same randomness as everyone else. Just like always betting on your lucky number in roulette doesn't magically increase your chances of winning. However, there is a better way. What we're doing now is basically trading in survival mode. You don't know how or where you'll get your next win or your next string of losses. The market has hundreds of possibilities at any given moment, and trying to get these right consistently is a fool's game. It seems like an impossible mountain to climb, because it is, but that's what the average trader does. This is what a great trader does instead. Where there are hundreds of possibilities, a trader will simplify this and reduce it to just two, and then they eliminate one, which leaves only one possibility. So they don't try to predict, they reduce. And then the market is basically forced to give them what they want. The market is at their mercy, not the other way around. So let's look at how that would apply in the real market. A blank chart shows hundreds of potential paths and possibilities. And if we want to make our lives easier and actually profit, we need to reduce these possibilities. We can do that by adding supply and demand levels. These are pockets of high volume and liquidity, and it means the price will gravitate toward them. So here's the thing. The price basically moves from one supply and demand level to another with very high accuracy. So there are still hundreds of potential paths and possibilities, but only two of them really matter, which is, are we moving to the supply level above or the demand level below? And the price can do what it wants in between. It can take 15 minutes or 3 hours. It can chop around here before it rallies, or it can rally right away. But none of that will rattle us because we know the destination. As long as we don't move to the level below, we'll move to the level above, and vice versa. There are only two real possibilities. Now we just need to eliminate one, and the market will give us what we want. And obviously we don't just want to guess or use gut feeling, because that'll mean our results are unreliable. We need something objective. I like to use the EMA cloud because it gives me an instant read of the trend, and the market is more likely to move in the direction of the trend. So that's an automatic edge. Let's see what it says here. Okay, here's the thing. In solid trending conditions, the EMA cloud will cleanly point to one side. So if it were bearish, it would be a very large and wide downward sloping cloud. That puts a lot of downward pressure on the price and makes it very easy to read where the market is going next. It's a very simple short. But the market isn't always trending cleanly, of course. There are times where it's slightly more difficult to read. Now, if the market is just incredibly difficult and choppy, then just avoid trading it. You'll thank me later. But there are times where it's not crystal clear and you'll just need to dig a bit deeper. So in this case, the 5-minute cloud isn't giving us the clearest indication. We see that the cloud was bullish before, but the price recently broke under it and dipped right into demand. And the cloud also flipped bearish. If this was a clear downtrend, then this would be an easy short. It would just be a dead cat bounce and we would hop in to ride the move down. But that isn't so clear in this case. It looks like we're in a sort of longer-term uptrend. When we aren't sure, it's best to zoom out. So let's go to the 1 hour to get a better look. And on the 1 hour, we see something interesting, which is that the cloud is sloping up overall. Granted, it's not the cleanest uptrend and there is some chop, but overall the market is pointing up. We also see that when the price dips into the cloud or dips into a demand level, it bounces off it. And in our case, we have something very similar to this move right here, which was both at a demand level and at the cloud. That provides 2 layers of support. This isn't the most convincing evidence for a long, but it does make a clean short feel less likely. You'd be much less comfortable going short here than you would if the higher time frame cloud was in a downtrend. So we've already reduced the possibility of one scenario occurring. If we want extra clarity, we can zoom out even further to the 2 hour. Higher time frames are usually much cleaner than lower time frames. And in the case that a higher time frame isn't clean, well, imagine how untradeable the lower time frame is. So the 2 hour is even more clear here. We're standing on some strong cloud support and still in an uptrend overall. That means that no matter how weird it feels to go long, that's the highest probability option in this case. A good short here could only happen if we have a major structural break. If we break the uptrend structure and break underneath the cloud, then we could start to look for shorts. And it would be evident on the lower time frames too. Until that happens, we assume the trend continues because it most likely will. You don't want to be the guy constantly selling into new highs or constantly buying the dip in a downtrend, right? Now let's go back to the 5 minutes so we can execute this trade properly. So we've established a pretty clear bottom at demand, and we're on our way back up now. We can enter here and place our stop just under the low. If it drops under this low, it doesn't necessarily mean we're wrong, and it might bounce back up, but we can reassess and re-enter our trade from there. In the case that it continues going down, we limited our risk. We don't need to have a super wide stop for no reason. Then we place our target at the next supply level. Let's see what happens here. So we did eat some chop before it went in our favor, but there's no need to panic. If it's not going down, it's going up. And that's how you take a successful LCE trade through the process of elimination. That's how you avoid falling down the prediction rabbit hole and ending up nowhere. Instead, you're systematically aligning yourself with the direction that's most likely to work. You won't be bogged down by price action or irrelevant noise, and you're getting in and out at the right levels. That's how you get a real sustainable edge over time and actually print. And at the next level, we can continue the same thing. This one's clearer since it's a breakout and the cloud is sloping up. The higher time frame is still clearly sloping up as well, so we can use the same process. Enter long with a stop under the cloud and target the next supply for a 2-to-1 risk reward roughly. And that would be another clean level-to-level trade. So you don't get tangled in any of the market's nonsense, and you just focus on a few high-quality trades. And that's how you're able to climb out of the bottomless pit known as predicting, and instead actually building and compounding consistent profit. It's about identifying the market's intent and trading only when structure supports it. You just need a framework that puts the odds in your favor. And that's what the LCE model does. Level, confirmation, and execution. If you want to copy this framework step by step, I break the entire model down inside my free training. Just click the link below to check it out. Make sure to like and subscribe for more breakdowns like this.